I heard a statistic that if you have an intra-market reduction during the year of 7% or less, your incumbent is going to win re-election, even as weak as this incumbent is. If there's an intra-market, intra-year reduction of 17%, so if we have a drop of 17% during the year, that would bode better for the Trump team. So God only knows what's going to happen, but the Fed certainly probably will try to rescue things at the September or November meeting with a rate cut, although all those percentages have lessened with the jobs report today.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Hey, David Wright is with us. We've got a really hot jobs number. I reached in the refrigerator, David, for a bottle of champagne, and I realized I had consumed that bottle of champagne for the last jobs number. So now I'm stuck. I need to celebrate, but I've got no beverages to do it with.
Well, I think you should just not worry about that, because I think the inflated jobs number is going to be revised downward. Although when you look at, what jobs are being filled, obviously what we're seeing here is a number that's been skewed higher by a lot of jobs that are service-oriented, leisure, hospitality, even as our fat government gets fatter. All that stuff has contributed to 272,000 jobs when the estimate was really 185,000. But like you said, it'll be revised downward for sure. But I think that poses some questions for the future of what's going to happen with, interest rates and the Feds. What are they going to do with that? Because at the same time we add all these jobs and then have our revisions downward, the unemployment rate rose about 4%, 4.1%. So you've got that, going a little bit higher. So, the Feds want to lower rates at some point, but some of the Fed officials are saying, maybe not so fast, because if the markets are levitating on AI stocks, what do we do with that? Do we lower rates until there's more demand destruction? So lots of questions out there. I think we all kind of have a feeling where things might be heading in the future, just using good horse sense.
So, as a point of fact, it's election season. Doesn't the Fed have to cut interest rates to help you? And that's Alan Abelson, late great editor. I think he passed on from Barron's, once said the Fed is doing what it does best, which is re-electing a president.
Yeah,
cynical, but true, huh?
Yeah, I think so. I think I heard a statistic that if you have an intra-market reduction during the year of 7% or less, your incumbent is going to win re-election, even as weak as this incumbent is. If there's an intra-market, intra-year reduction of 17%, so if we have a drop of 17% during the year, that would bode better for the Trump team. So God only knows what's going to happen, but the Fed certainly probably will try to rescue things at the September or November meeting with a rate cut, although all those percentages have lessened with the jobs report today.
Hey, remember, Will Rogers said over 100 years ago, invest in inflation. It's the only thing going up.
He was a wise guy, wasn't he?
Yeah, on many levels. So how do you invest in inflation, since that's the only thing that's going to go up here, David?
Yeah, good question. Buy all the gold you can and just hang on to it. I guess.
Gun and gold, right?
Yeah, there you go. Ammunition.
Guns, God, and gold. That's the
God and gold.
thing. And
I love it.
And you can buy a little Bitcoin while you're at it, right?
Why not? Let's throw that in for good measure.
Couple
Or some GameStop, perhaps some GameStop.
Yeah, what's with the meme stocks here, David? Like, I thought we outgrew that.
Yeah, I thought so too. But obviously, if you're just an ordinary consumer, you can play those games with stock prices. I thought Joe Kennedy did that during the during the 20s, but I guess we're back to doing that same thing again. It's kind of crazy what's going on in that world. But there's so many other things to worry about out there other than that.
It's a pleasant distraction.
Yeah, it is. It's kind of funny to see what's going on with little kitty there.
Yeah, it is. Like on the one hand, triggering short squeezes, I think, is a good thing, because when you've got those funds naked shorting stocks that are vulnerable, to be able to stick it to them, it's not so bad,
Yeah, that's right. I totally agree with that.
Abusive short sellers should be taken to the woodshed and taught a lesson or two. I mean,
absolutely.
If we had an SEC and a governmental regulatory structure that actually worked for the people, there wouldn't be any GameStop situations, because you wouldn't be able to do abusive short selling. And look, I think some short selling is good, provides liquidity. It also triggers rallies, stock market rallies. But in the final analysis, Elon Musk said they started short selling because they had to have the certificates, and they knew the certificates would take 11 days to get to them. So as an accommodation to protect the brokers and the clients, they provided for short selling to allow the certificate to catch up with the trade. But that's we've gotten way beyond that, haven't we?
Yeah, absolutely.
It's like you had to wait for Wells Fargo to deliver your share certificates before you transfer it. So rather than having to wait 2 weeks to get the physical certificate, you could sell the stock, and then when you have the certificate, you close out your position and you're golden. But so, hey, what are the sectors you should be looking at coming up? Do you think the mining sector, precious metals, is going to pick up in the next year?
Well, I think it certainly can. I mean, you have to look at I think the mining stocks, the energy stocks. So if it's a Trump presidency, you obviously can look for those sorts of things. Financials, of course, impacted some deregulation. I think some of those stocks will perform better. Obviously, if Biden gets in again, you got to look at the things that are more green in nature. But I definitely think that for most of my clients that are retired, we're sticking with the things that generate dividends and interest, and more of the value-oriented things than anything else.
All right. So you like dividends, right?
Yeah, we do. We find that it takes a lot of the sting out. I mean, our dividend-oriented things are on pace this year, obviously not through much appreciation, but just through dividends and interest to have about a 6 to 7% income, which for most people, if they've done a good job of accumulating their wealth, that's going to give them plenty of cash flow to live off of from their portfolio. If they do want growth plays, then they can obviously invest in the NVIDIAs of the world, AMD, Microsoft, those types of things. But for just pure dividend plays, we use the universe of income strategies, corporate bonds, preferred stocks, those sorts of things, generating a nice return. Obviously, the whole concern that I have moving forward is just what's going to happen to our economy. Just the bifurcation of the wealthy and the middle class is concerning to me. When you look at we've got all these illegals coming over the border, which are filling all these service jobs. At the same time, you've got all these Gen Zers or millennials that got through COVID, got used to spending more money, having a nicer car. They had all these government subsidies and in COVID payments, they're used to using their government money, and now their credit cards are maxed out in 1.1 trillion in credit card debt and growing. When does all that end? I heard a statistic that there's about another $3 to $4 trillion available on most middle America's credit cards. But at what point do the credit card companies say, you know what, if you're a little behind on your credit card payment, we're going to start cutting back your credit card credit limits? So when does that whole issue of credit card debt start to, bite the middle American so that, they're going to be in bankruptcy situations? So, and that doesn't even measure the $700 billion that's out there in revolving debt, the phantom debt, the buy now and pay later types of debt that are out there that's not even included in that. So people have gotten used to this cushy lifestyle, spending money, buying their Amazon toys every day, and when is that all going to come crashing down around us?
Yeah, well, I'm on the buy now, pay never plan.
Cool.
Do you think that's a sound strategy?
Absolutely a sound strategy. Let them, you know what? They'll never find you, Kerry.
I'm hoping. If I'm in age at someplace, what are they going to do? No, but
right.
I've never stuck anyone before in my life, and I'm not about to now, but it's damn tempting, isn't it?
Yeah, damn tempting. You got that right.
Yeah. All right. So look for dividends, look for yield, no bonds, right?
Well, we're buying bonds, but selectively. Obviously, there's not a lot of countries buying our debt right now, but the people that we have in bonds right now, the durations that we have, intermediate durations, certainly in shorter durations, are doing pretty well. But things that can generate the income that's reliable and predictable, that's kind of my world. That's what we say.
Okay. I like it. All right. David, appreciate you coming on. It's hot.
Thank you, Kerry. My pleasure.
Summer is coming. Hey, just tell us again where we find you, how we connect with you on the web.
Well, you can go to two places, Wright Financial Group. That's Wright with a W, financialgroup.com, or my book, Bonfire of the Sanities, BONFIRE of the Sanities.com. Either place.
We always appreciate your wisdom, David, and your words, and the link will be in the show notes for this interview on financialsurvivalnetwork.com. And while you're there, please sign up for your free newsletter. David, always a pleasure. Thanks for coming on.
Take care, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.